Good afternoon. I'm Victor. I'm a trader, and I'm just going to explain to you my perspective on candlesticks. A lot of people have been asking me to help them, friends and family, and that kind of stuff. So rather than try and regurgitate information that I have learned from other people, books, university, all that kind of stuff, I thought that I best explain things the way I see it, and then you guys can basically compare that to how you learn things, so you can actually have different perspectives on how things work. So right now I'm going to be doing a candlesticks basics, not tutorial, but maybe explanation. Candlesticks on their own are great tools. Like, if we didn't have them, we wouldn't really know what's going on. However, on their own, they're pretty well useless. So, like, when I say they're useless, they will not help you predict the future, which is why in this video I'm expressly going to be avoiding looking for patterns within candlesticks, because even though the patterns can become handy when you have confluence between your indicators and all that kind of stuff later, like, different, on their own, you may start to see patterns which really are not indicative of what's going to happen. So it's sort of like seeing faces in the headlights of cars. Like, people, it's in our human nature to see things that we're looking for. We find what we want to find, and that's something that I really, really want to avoid. So I'm just pretty much going to explain how candlesticks operate themselves, and what, and more so the market psychology and the market personality. So you might think, what is a market personality? I like to see the market sort of like a living organism, and all the people that are trading on an exchange, for example, are like the cells or a part of that organism, and things move around, and as things change, the price changes. So you have a big thing change in this organism, it's going to affect the price, but little things, not so much. So, okay, I'm just going to start talking about candles in basic right now. Okay, I'm focusing now. So candles basically are on their own, but any other indicators, that people call it, they're the naked price action. So they're the price that is expressed in any given time period. So what the time period is, say right now, as you can see, I'm in the 30-minute chart. So that means that every single candle, everything that happened in this vertical column, represents 30 minutes of time, right? So basically, if you look at any candle at any different time, you can look at the 1-minute chart, things start to look rapidly different, but you'll see what happened in that minute at that given time. So, at about just before 2 o'clock today, we saw a very bearish candle and the price was falling. So that same thing applies if you look at the 6-hour chart. Each candle then represents 6 hours of time. So why does this matter? Well, it's important to understand the sort of tug of war that goes on during that time. That's what I like to see. I like to see the battle between buyers and sellers. And candlesticks, for me, are a really good way of seeing and understanding how that battle is going. So I'm going to go back to your, I don't know, we'll go to the 1-hour chart. And we'll just pick any candle. Okay. We'll look here at this big green candle here. Okay. Every green candle, or bullish candle, basically means that during that time period, that price action has moved upwards as a result of there being more buyers and sellers within that specified time. Okay? Red candles are exact same thing. Prices decrease over a period. Effectively, more people have sold than they have bought. It's the same, just in reverse. So using that same logic, we can start to look at how people are thinking, how the market is feeling, based simply on just a candle. So I'm going to look at this big candle here, this green one here. So at this candle here, at $13,372 at the beginning of this hour, whenever this hour was, we'll have a look. We'll say just 2:30 or something like that. The market opened at 13,374 US dollars. And what happened is, during this entire 1 hour, the price went up and finished here at $13,814. So what happened all in the middle here? Well, if you want to find out what happened in the middle and get a real closer look at the battle that happened in this, in this particular candle in a more in-depth detail, you can look at a smaller time frame. But if we're just sticking to this particular time frame, you can still get a good understanding of what was going on. So this part here is called the real body. I don't know, me and my friends call it the shaft. We're being silly, but whatever. This basically means that, doesn't mean that the price started here and then just gradually went up and stayed in an upward trajectory and then finished here. It's not necessarily smooth sailing. And this is how the wicks or shadows or something like that, these lines that you see up above your chart, your candles, they become really, really handy in explaining what the market is thinking, what the organism of the market is, I don't know, thinking about. So, as you can see here, as I said, the market started here and it closed here. We also see this thing up above. There's this thing called a wick. So what the wick basically means is that the price at some point, even though it closed here, did get up to here. So that means that someone bought or sold at 13,899. However, in that hour time, the candle closed lower. So what do these wicks mean? What does this mean in regards to psychology? The people, how they, what the sentiment of people? Well, in this example here, it means that a lot of people got on board. A lot of people bought and sold. Yet, it actually got so extreme that they went all the way up to here. They managed to find a peak. However, the sellers, or the bears, did manage to squish the price or compact the price back down a bit. And the wick is kind of like representative. They're the remnants of where price action was. And then you look over here to the very next candle. This is the red candle, or a bearish candle. I should really have a list of things. Anyway, this candle here, all bearish candles are the exact opposite of bullish candles. They're the same thing, but they're just price action going the opposite way. So using that same logic, price started here at $13,815 or $814 in this given hour. And it actually finished all the way down here. And it went to 13,610 roughly. So that is quite a strong bearish candle. And this is where I want you to start thinking about, why is a candle strong and why is a candle weak? Well, this is why the wicks are important. So we had a big amount of growth. However, after a while, at the top, we did see the market, or the buyers and sellers, push that down, leaving a wick. The market opened here, and even though the bulls were able to push the price up to $13,800 or $862, I think it is roughly, overall they won this battle and they pushed it. So I see this wick in this example as a kind of a reversal. You see that, you know, this top wick here is showing that the market is actually going the other way. So that's what it means to me. So we can have a look at any other candle. So here's a good example. I'm not going to get into the names of them because I don't want to confuse you, but here's a candle which is basically indicative of a very powerful upward trend that's on its way. So what this means is that, as you can see here, we've had a series of red candles, and then we've had 2 green candles. I'm not going to get into them too much, but as you can see here, actually no, I will talk about this one here. This little, I don't know, candle here, it started here, and it's not quite a doji, but it started at this price at $13,361, and it finished at $13,391. So the actual difference between the opening and close is not that great, but the actual amount of price volatility within this hour is actually displayed within this, in the wicks. And as you can see down the bottom here, the price actually did manage to fall to $13,312, but actually did manage to get all the way up to $13,586. So that means that along this line here, up along here, there were transactions were made at that price. Anywhere along that wick here, someone bought and someone sold. But again, from the market organism perspective, it started here. They were able to push the price up. There was obviously quite a struggle, but they pushed the price all the way up to here. And then the bears were able to sell and push the pressure all the way back down there and squeeze them actually below where the market started. So actually the bears did have some almost momentum. It could have maybe happened at the soon after the start of the candle. It's hard to say because we didn't see it in real time, but they actually did manage to push the price down. So I'd say, judging by how price ended up happening in the future, that this particular candle here actually started here. The bears got on top of it pretty quickly and started to push the price down. The bulls, or buyers, really got into action, smashed it all the way back up here, and then squished it in the middle, and then there you can see that's where we closed. Moving along to the next candle. The market opened here at $13,391. And as you can see below, there is quite a low wick all the way down here. However, the finishing price on this particular time frame is all the way up here at $13,584. So what this means is that the price started here. The bears did manage to push the price all the way down here. So all the sellers, the people, you know, you buy, you know, the competition between buyers and sellers, people who are going long or short, they managed to push the price all the way down to this point here. However, the bulls just had way more fuel. They had way more money. They were just people throwing more money at it than the people selling it. So there were more people that were pumping it than those that were trying to dump. It's as simple as that. And I like to see these little tails as signs of price action moving upwards. It's sort of like, even though we did see resistance, and it actually did fall to this point. This means that in this battle, right, it literally is like a battle, a fight, a psychological battle, whatever you want to call it, but the bulls won, and it's quite clear they won significantly. Over here in the next candle, we see that the price opened just below the top of the previous high bullish run that we had. And again, you can see there was a bit of a battle and it pushed it back down. But they were not able to push the price much further down than not even halfway down of the previous candle. So even though this is technically a reversal, as in like the price has been falling, and you can see the wicks where our true bottom was there and our true high was actually up there. That high there means that the bulls are still fighting. The bears, they're desperate. They really want to keep this downtrend going. So they're trying hard here to counteract this green candle here. They've tried and they've kind of made a little dent, but they have failed. They have honestly, truly failed. In the next candle, again, it's the same thing. They open here. It's a big battle between the two, but the bears, again, overall lose. Because the price starts here. They managed to push it down to there, but the bulls pushed it all the way up to there and managed to close here. Alright, so like I said, I'm not going to get into the names of any of these candles or the pattern formations, like, you know, evening star, morning star, shooting stars, gravestone dojis, bearish spinning tops, dragonfly dojis, you know, even like abandoned babies. There's just like thousands of different names and setups, and like everyone has a different take on what is a good candle, what's a bad candle. And as I said earlier at the beginning of the video, there is no candles alone are not going to be a completely reliable source. So you need to use them in conjunction with other indicators, but still understanding what they mean and where the opening and closing of each candle is and what the wicks mean is actually pretty handy and pretty important. So I'm going to move on finally to this last candle here, where the price opened at $13,777. The bulls tried really hard. They tried hard. They pushed all the way up to there. Okay? And they got up the price got significantly pushed up. And however, the bears at this point, they've rallied, they've spoken to each other, you know, they've started communicating. No, not really. But basically the market sentiment has started to rally back against an upward price action. So as you can see, this long wick here, you know, it's not like a evening shooting star or even, you know, or whatever you want to call it. It's not that, but still, you can see that the bulls lost this battle, and the price fell from here all the way down to there. And then, so this is a powerful bear candle, and this is followed up by yet another powerful bear candle, and followed by yet another bullish candle, but still, as I mentioned earlier, it is fully engulfed by this previous bear candle. So yeah, you might have been able to scalp a little bit in this little time frame, but overall, the market is falling. So I hope that this helped. I can make any video on pretty much any topic. I can talk about the patterns if you like. I can talk about support and resistance. I can talk about your MACD, any indicators that you guys might want to use, any indicators that any indicator settings that I use. And like I said earlier at the beginning, just watch other videos as well and just compare them, because just because I look at things this way doesn't mean that you need to look at things this way. Like, it works for me, but I like to see and hear everyone's opinion, because the more you know, the more you earn. That's pretty much it. Alright, so thank you.